Right, I'm a Pittsburgh-based IRS tax attorney. I got a lot of phone calls from people, questions from people about IRS tax liens. An IRS tax lien, what is that? Basically, it's a notice in the county court that there is a debt owed to the IRS. So what that basically means is that property cannot be sold in that county by the person who owes the money to the IRS, unless the IRS is paid in full. So does this mean that property cannot be sold at all? No, there are procedures. In other words, if you owe back taxes to the IRS and you own real estate, an excellent way to pay down the debt is to sell the real estate, but it has to be done under certain procedures. We did this just recently. Had a client who owed a significant liability to the IRS. He had a rental property in which there was some equity, so he had a real estate agent, hired an agent, and the agent went through, marketed the property. We got a buyer, and then as soon as we got the buyer and there was a purchase agreement, we notified the IRS for a discharge of tax lien. So what happens is that the IRS approves the sale. In other words, the taxpayer cannot receive any funds from the closing. All of the excess funds after the mortgage is paid, the excess funds are going to go to the IRS. The IRS wants to make sure that the property has been appraised, that the sale price is accurate. In other words, you can't give a discount on the sale to your purchaser. But if the sale follows those guidelines, it's being sold for the appraised price, it's a fair price, and the closing fees are satisfactory, there's nothing excessive being charged at the closing, then your sale is going to go through. The IRS's debt is going to get paid down considerably by, all those net proceeds are going to go to the IRS, and you're going to be able to reduce your overall tax bill. This can be an excellent way to reduce a liability to the IRS. Now, what happens if your closing proceeds are going to pay the IRS in full? Well, what you want to do is we would get a payoff from the IRS that's going to be good through a certain period of time that's going to be enough to meet your closing date. So there, if you know that you're going to have sufficient funds to sell the property and pay off the IRS, then you don't need to get an appraisal. You're going to be fine. The IRS, they just want to make sure they're paid in full. The tax lien would be satisfied, and your closing is going to go through without any problem. A lien, is just that. It's a form filed with the county real estate department. If you have a lien, if you have a federal tax lien, give my office a call. We can talk to you about the pros and cons, some of the planning strategies on what to do if you've been notified about a tax lien. So call my office, 412-920-6565, if you have any questions about federal tax liens. Thank you very much.